Ever wondered how money zips around the world in the blink of an eye? It seems complex, but let's break down the global financial system into something super simple. Imagine you want to buy a cool gadget from Japan. You pay in your local currency, say dollars, but the seller in Japan needs yen. How does that happen? This is where the magic of the global financial system kicks in. It's basically a massive, interconnected network of banks, financial institutions, and markets all working together. At its heart are central banks, like the Federal Reserve in the US or the European Central Bank. They're like the big bosses, managing a country's money supply and setting interest rates to keep the economy stable. Then you have commercial banks, the ones you use every day. They take deposits, lend money, and are the main players for you and me when you send money abroad. Your bank doesn't physically ship cash. Instead, it communicates with a bank in the other country through a secure messaging system called SWIFT. Think of SWIFT as the global post office for banks. It doesn't move the money itself, but it sends the payment orders, telling Bank A to debit your account and Bank B to credit the seller's account. But how do they swap dollars for yen? This happens in the foreign exchange market, or Forex. It's the largest market in the world, where trillions of dollars worth of currencies are traded every single day. Banks and big financial players are constantly buying and selling currencies, and their activity determines the exchange rate, how much one currency is worth in terms of another. This rate changes second by second based on supply and demand, economic news, and even political events. So, your bank uses the current exchange rate to convert your dollars into yen. The actual settlement, where the money officially changes hands between the banks, often happens through correspondent banks. These are large banks that have accounts with each other in different currencies, acting as middlemen to smooth out international transactions. It's like a web of trust and agreements that allows money to flow seamlessly across borders. Beyond just payments, the global financial system also includes investment markets. This is where companies and governments raise money by selling stocks and bonds. A stock is a piece of ownership in a company, while a bond is essentially a loan you give to a company or government in exchange for interest payments. These investments are traded on stock exchanges like the New York Stock Exchange or the Nasdaq. International organizations also play a crucial role. The International Monetary Fund, or IMF, acts like a financial firefighter, lending money to countries in economic trouble to prevent a crisis from spreading. The World Bank focuses on long-term development, funding projects like building schools and roads in developing countries. They both work to promote global economic stability and growth. So, let's recap the journey of your money. You pay for your gadget in dollars. Your bank sends a SWIFT message to a bank in Japan. In the Forex market, your dollars are exchanged for yen at the current rate. The money is settled through correspondent banks, and the seller in Japan gets paid. All of this is happening within a framework managed by central banks and overseen by international organizations. It's an incredible, high-speed system built on technology and trust. It connects us all, allowing us to trade, invest, and share resources across the entire planet. From a simple online purchase to massive corporate deals, this intricate dance of finance is what keeps the world's economic engine running. I hope this made the global financial system a little less mysterious. If you found this helpful, give this video a like and hit that subscribe button for more simple explanations of complex topics. Thanks for watching and see you in the next one.